Good morning, everyone. Hope you guys doing well. Welcomes to joining me um, to this number 24 of the Zoom call that we've been doing this since the beginning of March, and has been fantastic to able to talk to many of you guys, either in Facebook, on YouTube, or on Zoom. Um, as you know. I'm doing this on a weekly basis, and I'm doing this on a weekly basis. Hi, David. How are you? Um, yeah, so it is it is set up in a way that we want to reach to as many as investors and let you guys know what's the market like, what the market is doing, and I intend to keep doing this way until um, 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 either the values of this meeting has subsided a lot, or we go into a second stage, honestly, to second stage of all this, craziness happenings out there. But this is the 24 weekly Zoom call. I've been doing this since beginning of March, and a little bit of myself. I have started investing in Canada, in US, and China since 2006, when I was really learning, really don't really know about anything about real estate. Bought my first condos property. Over the years, invest in US. I go in the US in 2012, and really first and really start investing in multifamily a few years back. But why is that this call is, it's, as I said, for you guys to feel free to join my Zoom call, because that have a link on the Facebook here, and I didn't have it on live face on the YouTube, the link. But come here so that you can see the slides here. So this is number 24 Zoom calls. I do it on a weekly basis, and I have 9 meetups because I do one meetup a month, basically. But I want to share over the months. I want to share the updates on the apartments. What is the pandemic has been changing? Like pandemic has been changing every different sectors of of the business, whether you're in hotel, whether you're in retail, whether you offices, like it touches every single aspect on our industry. But we focus on the apartments, so I would like to give you the updates on what's the market like on apartments. And I find that it's really great way to share on a weekly basis, because every week we have something new. Every week we have something changes on the market, on the pricing, on tenants payments, so on and so forth. So I hope they give you enough value so that you have confidence when you're talking to brokers, then what the market look like. What's the market look like? What is lenders is doing this week, and what is the investors thinking? Biggest thing is when we're investing in apartments is like you have to understand um, the market. Market meaning that, let's focus on a little bit on the market, meaning the investors. When you're raising capital, you need to know what's investor thinking. What is the stock market is doing? Of course, it's really high, and we don't know where it's going to go in. But you have to know enough on the global settings, the stock could go and because all these kind of things to kind of piece it together. Because when you're raising capital, number what you're doing, in our case, apartments, you kind of have to know your competition a little bit. The benefit of really, investing in multifamily is, you can retire with passive cash flow. Our investor have not missed a payment. I'm really glad to say that since day one they invest with us. And hard asset is the one thing that is going to stabilize. Whether it's a class A, B, or C, everyone have their own focus. We focus on class B and C, probably because we can bring value. And some may think that there's a little bit risky in this time, but it's a little bit balance when you talk about return and also providing a safe asset. Last project we did, we increased 53% in terms of the equities, and we shared quite a bit of that with our investors as we promised with our investors. So I've been doing this Zoom call on weekly basis. I'm seeing some of you guys keep coming back, and David and other guys just keep coming back. I applaud to what you guys doing, because you know what, if you the only one way to understand the market and be on top of the market is really have to pay attention on a continuous basis. And um, and and you have and and that's how I've been educating myself, whether that is really pricey areas like on the coastal areas, or some of the areas that we really focusing on the Midwest areas that you can cash flow. You can find anything from 6, 7, 8, or even higher cap on investment cap on apartments, and really making a cash flow for your investors. If you're investing for your investors, or even for yourself, you need cash flow, especially time like this. And that's why I set up this Zoom call, is for people who are thinking of how can they invest, how they can invest in real estate. And I believe in multifamily, such a powerful way to invest, and such that you can have multiple tenants coming in. Times like this is really challenging for small landlords owning small properties, single families, duplexes. It's really hard to make sure you're on top of the rent, make sure the tenant is paying. If one of your tenants doesn't pay, if you have a duplex, of course that's a really major problem. And I think we're going to see that. And on today's meeting, on today's slides, also show you some informations on what is actually already happening on some of the smaller properties. And it's just the way it is. If you don't have economy of scale, if you're investing in the, smaller properties, or if you look at smaller properties, it's just harder to cash flow. And that's why we invest in multifamily. That's why we look at multifamily. And that's why we want to look at the area you can cash flow days in and days out. And there's ways to do that. And that's a systematic way that we always pitch month in, month out, years in, years out. That I didn't create myself. I learned it from people really smart, and they build thousands units and still continue doing it. So I want to get the nugget and share with all of you guys, whoever come to my meetings, and that there you goes. And it's not hard. So so I create something called Step to Multifamily Real Estate Investing for people who want something a little bit more on, what, this is great, how can I start it? So this is something that I created in my mind, that if I have this years ago at the price that such as this Step multifamily I'm offering, then it's great. It's shared. How do you how do you research your market? How do you raise capital? How do you create credibility with your team? Create a team, attract the team. That's really important. And how you negotiate the good deals. Time like this, this is one of the most timiest topic. How do you negotiate deals? Where we talk about the discrepancy of right now happening today. Right now, the market is happening right now. The discrepancy of sellers asking here and buyers offering here. How do you negotiate the deal? And that comes hand in hand to how do you do underwriting effectively. That's going to be a lot of deals, a lot of sellers still holding on to the price at the pre-pandemic level. How do you the question is come down to really simple. If the sellers want to sell at the pre-pandemic level, and a validation is up here, and the rent is slowly going to be coming down, when the government subsidies is going to be slowly dried up, as we know, the last payment from the PPP, Paycheck Protection Plan, is ended on July 31st. So it has ended just a little bit over a month now. So how do you make sure you go in and negotiate a deal, underwriting a deal, and keep in mind that you can get the cash flow, and you're going to do well, and you're going to pay the investors and the lenders, very important. How do you how do you do that? So that's my intentions of going through the course, going through meetings like this and Zoom call like this, and sharing with you the importance of our critical underwriting. And and then move on to learn to lead. We're creating a team, creating your property management team, learn to manage on continuous basis. Important. Remember, the important thing is buying is important, but managing effectively is going to be the more important part. I would say more important part, because if you're not going to be managing property correctly and effectively, all those underwriting assumptions, you say they're going to be doing a little bit of increased rent, or even maintain the properties correctly, can just go down the drain. Because you know what, you have to be able to successfully manage your properties, have the team able to do that, have the experience, have the expertise to be able to help you to manage the team, manage the properties, and of course financing the deal. But today I want to be, it's really something that I have developed over the last month or so. I want to give you a nugget here and there, but nothing major. I want to keep this meeting short and sweet, and so that you guys can go back, because we're doing this on a weekly basis. We don't have to share, hours and hours of information that, I pinpointed the critical informations that I want to share. So again, apartments updates that we're going to talk about today. Some of the nuggets on some of the things that I'm also slowly seeing that hasn't been surfaced before, which is a bigger and smaller apartment. Okay, what is the difference between of the quality, and how do the market responding? What's the market? What's the investor responding to that? And hi, Marquette, how are you doing? Please keep joining us on the Zoom calls, because that's where you can see the slides. And apartment investment by the state, it's still developing, it's still really fluid, and the market is still changing on different kind of place, on the closer areas like New York and San Francisco. Some of the great so-called the holy grail of the market that were really, really hot. Investors are chasing. So what are they like right now? Rent is coming down. We know that, and pricing has not come down yet. So I'm going to show you. I'm going to share with you. Hi, Hammerhead. Greeting. I don't know what time is in Germany, but thanks for logging in. You must be very late right now in Germany. I think it's probably 6 or 7 p.m. But welcome to join us on Facebook. But it's really critical to knowing that right now the price has not actually come down a lot, and the price on the apartments has not come down a lot. And we have slides that are going to show you where they right now has not come down a lot, but the rent is slowly coming down, or at least slowly slowing down quite a bit. And we know traditionally real estate is going to be lagging, the real recession triggering point at the start, at least 6 months or even longer. So we are actually coming to the time that, for people who are actually paying attention, from previous recessions, how many months, how many years that's going to be lagging from the recession start. So we are 6 months right now, when we start the pandemic is about March in the United States. So we're in September. So right the point. So for you guys, for ladies and gentlemen, that you pay attention, to, previous recession, so to speak, where we're heading to right now is going to be very important from now, next 12 months. And you should probably see, because it's already happening right now, what is the price going to look like for apartments. Definitely we pay attention to that, and we focus on apartments because that's what we know. And we occasionally looking at other asset because we want to educate ourselves. What is a comparison? For example, what is a comparison on retail versus apartments? What we know, what we learned over the last 6 months or so, 3 to 4 months or so, we know that apartment price is still very, very solid. Very, very solid in the means that that's not of the sellers want to decrease the price. We talk about single digit correction on the price, and it's still understandable because rent hasn't really come down that much, and you know that, right? Hasn't really come down that much, and maybe it's stagnant, but collection has come down, right? Has affected quite a bit, but in terms of rent, still not coming down. So, when I say, hi Mandy, when you comparing or even kind of benchmarking, like, other asset, like, office, retail, hotel is actually starting to see some very, very big movement right now. And as we speak, that's really, really important, because you know what it means, that the confidence for other kinds of set of, for example, hotel is eroding. It's very important when we look at apartments. It's still very, very solid, and it's really co-aligning with aligning with what we were educated, and when we pay attention as a student of history, we know that from last time, when recession hit, apartments were affected, but it's still doing really, really decent. And that's what we're seeing right now. Because considering that the money is moving around the group continuously moving around the group. But what we're seeing right now is, how do you compare with different kind of asset? We compare hotel, apartments, and so on and so forth, offices. We still seeing apartments as holding is footing, so to speak, holding a price, so to speak. And as investors, we want to go in when opportunity comes, of course, but we also need to pay attention. If you go in the hotel, you've got to make sure that you have a few years back of heavy fake war chest, so to speak, because we really don't know. That report and after reports talking about airlines, as hospitality industry is going to be not recover. Talking about 24 months up to wait to 5 years from today. So that makes one thing that we learn that is residential apartment is still very attractive in terms of raising capital, so to speak, because it still have a place. Tenants still need a place to live. Maybe rent will come down, not a lot, but modularly, or modestly. But what does that mean, right? It means the attractiveness of apartments still very solid. We're still seeing deals getting done, and we have some solid figures right now that I'm going to show you on this. So stay on the Zoom call. But that's what we educate, and that's what I want to intend to give the value for people who say, this is doing every week. I want to give you some new figures every week. I want to give you a sense of sensitivity of where the market is going and heading to, as you keep educating yourself on a weekly or consistent basis. So in US, 1 in 5, and that is already the verdict, 1 in 5, 20% deferred, simply failed to pay the rent last month. That is coming from the household pulse survey from the US Census. That's what they call, it's funny. They call it evictions tsunami is coming, unless the government is going to provide some more assistance that expire on 31st on August. So Trump signed a few executive orders that is basically voluntarily, after the 31st of August, that the PPP expire, different state by state. So that was, hi Aunt. So hi Aunt from Hong Kong. Hello, good day. So different state have this program called voluntarily. Basically, it's not a PPP that is like federal. So the executive order signed by Donald Trump and at the beginning of August. So it's basically saying that different state can have voluntarily they can join the program and they can apply the program. And so it's not a countrywide assistance program that is like providing $300 per week. So number two things is like, two things that's like, you can take it away is number one is already half of what it was from the $600 per week. And then the other thing is not for the whole countrywide. So pay attention to those. 20% deferral, and the numbers would probably only go up. And I also do my informal survey, right? I talk to this is kind of I want to share the information. I looking on the reports on all the big report in terms of the statistics, the gov, in terms of looking at all the major CBRE reports and whatnot, but I also do my informal survey. because that's where I'm going to get the block to block on the local city level. It's really important when you're doing your market research, by the way. That's how I do my market research. I piece it together from, the global, from the news, and digest all the information. And I want to do my own little survey and to see whether that is actually making sense, And, in my formal survey is this. I asked my property managers, what is the price like? So he just ended like this, and the price is already lower. It has, in certain state, and you have to be careful which market you're talking to, because I do look at some of the markets, they're going very strong. But the question is how long, right? How long is going to go for really strong? If the market is not going to turn around, if the government is not going to continue subsidies, if we don't have a vaccine soon, and if the economy is still largely closed for the next 3 months, and I guess your guess is as best as my guess, where the economy is going to, and where's the collections going to, how many tenants is going to be paying or not paying, right? So, but that's why we do this call. That's why we do this education on weekly basis. But rent is coming down, price already slowing coming down. A lot of property listing. This is what I find, because I register to the major firms. I want to see what's the listing. What I see is a lot of property listings starting to show up in the last 30 days that wasn't there at the beginning of pandemic. So remember, the seller at the beginning of pandemic, this is already a change. At the beginning of pandemic, we talk about March, April. Sellers want to hold off to the deals. Deal flow had been substantially decreased at that time. So meaning that, sellers were not wanting to just, they want to pay attention. What is the market look like? So nowadays, some of these assets coming on the market as we heading into stabilization of this pandemic. So this is not something that I haven't seen before. So many properties, we talk about 200 units and up. We talk about big and small, different locations, very, very hot locations, Florida and California. All these areas we're talking about has major listing. I see 2,000 unit yesterday, one packages, just online. And you know what? There's something that I haven't seen before in the scale. That for the last 6 to 9 months, I would say, and definitely we'll put the pressures on the pricing when we have such a great deal flow. And so that's that. And in terms of apartments investment volumes of multifamilies saw a sharp, huge drop in the second quarter, down 76% according to CoStar, a really major reports on multifamily investment, and down 70% on Real Capital Analytics data and RCA. So in May 2020, investors pay $3.1 billion to buy apartments in the States. So that is roughly, and that's basically the same number, 1/5, we talk about 1/5 on the collections. And this is also 1/5 of the amount they spend investors buying in 2019. So we talk about 1/5 of the old volume, and of course it's huge. We're talking about 15-16 billions last time in May. We talked about 3 billions. So largely affected. So it aligned with what I've been sharing with you at the beginning of the pandemic. That's a lot of sellers holding off. They want to basically wait and see mentality, so to speak. They want to wait and see how this is going to play. And I do think, and I do a lot of reading, and these two lines basically align with what we have been seeing for the last 3 months to 6 months when we talk about apartment investing on different market. Number one, price discovery. And price discovery meaning that, as I earlier talked about, seller want to sell it here, and buyers want to buy it here, largely because of the fact that buyers want to be safe. They don't know the price is going to come down. I'm talking about the market. Just talk about here. When sellers want to sell here, the buyers want to buy here. So the market price is going to be somewhere in between. We don't know in here, very close to the listing price, or really close to the some of the offering I see talk about 20, 30, or even higher discount of the listing price. We don't know where it's in between. So the price discovery mechanism, what we have been witnessing and the market right now happening is this mechanism. It's going to be eventually closer to the sellers here, or is it going to be closer to the buyers? So this is the kind of like the tuck and toe wall, the pull and push wall, so to speak. This is the price discovery. And then the next part is really is a bit like the bid and ask gap. This is the gap we talk about. It's really, really large. And that's why there's not much deals going on to be closing. And talk about the 3.1 billion, which is 20% of the typical close on 2019. And that's explaining the reason why. Will they increase? I think it will be increasing. But as we have more deal flow, as we have more deals closing going to the Q3 and Q4 of this 2020 interesting year, and I think the price discovery will be more solid because there's more deals flow going in, then we will know where is it going to in terms of the price, on the market price. And find this very interesting. I will share this. Cheapest apartments are the biggest foreclosure risk at the payment fall. And this, I see this on National Real Estate Online. And tenants and Class C apartments pay 54% total rents in the middle of June. 54%. So it's basically just above the half. According to the List Lock website, 7.5 million units and categorized in Class C. So accounted for about 35% on the rental US supply, and is in this range, 54%. It's a huge number. So if you're gonna see foreclosure and distress sale, I think your guess is as best as I am. A lot of smaller owners, a lot of us mom and pop, 2 to 4 units is going to be hot heated, especially when imagine this, and the market actually aligned this and then shared this already. If you own a 4 unit in New York, 54% in Class C they didn't pay. Guess what? They already never cash flow, because if you're buying an apartment in New York, you will never cash flow, and you're probably paying 2 or 3 cap. Now the problem is now not only that you never cash flow before the pandemic, now your rental income dropped 50%. Right? This is where really just 3 months, 6 months. This 6 months on the pandemic right now. You guess is as best as I can. Collection is going to be really bad, quite ugly in when going to Q3 and Q4 if the economy doesn't improve, right? And we know that as we speak, millions and millions, we talk about 11 millions right now that's still getting employment benefits in the US, and largely closed, our economy largely closed in US and in Canada. So even if the economy is going to change, improve tomorrow, which we don't really see any basis for that. But let's just talk about that as a basis. Let's just say that it's going to be do a V-shape tomorrow. It's still going to take 3 to 6 months to get all these tenants going to be start paying the rent and getting better. But we know that tomorrow the economy is not getting better tomorrow, and also additionally we talk about if the other party, if we have a change of party, change of presidents, that's going to be really interesting dynamics as the tuck and toe, again, the push and push of, Trump is all about the economy, all about pushing the economy up. And then, of course, the Biden's group is about some of the tax, some of the benefit may be affected. Maybe Joe Biden talk about closing the economy. So you have to pay attention to all those. I don't intend to know, we don't know what is going to future is going to uphold. We really don't know. But what we can know is keep educating ourselves, right? Keep educating ourselves and learn where the market is going to be very, very interesting. But I would say if you are raising capital, this is a fantastic time, because looking at the bonds market, the bonds paying really minimal is actually very advantageous for investors like yourself, and go out and talk to investors. If you can find good deals, and if you're looking for good deals, And this is going to time that it's going to be a lot of good opportunity as a foreclosure is probably coming, distress probably coming. And guess what? The price is probably going to go down too. But I want to, I want to summarize this. But one thing that I always do is like I do boot camps with all you guys, online, offline. So we're gonna have a boot camp September, October, underwriting, and then we do the Zoom calls, bi-weekly coach calls, so to speak. And then we are going to probably trying to do a market visit, as market opening up, and as I talk about, we have a virtual home study program. If you're interested, if you think that if you think that you want to invest in your education in real estate, there's no better time to actually, I'm talking even time. Forget about the cost. Cost is really minimal. The time investing in the real estate in multifamily is something that's very, very important. And I'm so glad that I did that 5 years ago, and I never stopped. And I never really stopped educating myself. I'm sharing. One of the big things I share in this Zoom call is basically, this is actually helping me to understand the market. When I understand the market, why don't I just share with all you guys? So that's why I do this. So, but I'm really glad that we have a lot of investors joining us to learn how the multifamilies, how joining the online program. I'm really glad that we have a lot of investors joining the group. We have over 130 subscribed in the first 2 weeks. So the number of investors still coming in. So don't wait and check it out and ask me more information on that. But I want to conclude today's Zoom call, so to speak. You need to buy right. A part of buying right is educating yourself on the market, what's going on right now out there. And that's including the market and also education yourself. What is the market on the deals? And talk to investors, get yourself educated, and keep coming to meetups, Zoom call like this. I want to thanks to all you guys coming in, and thanks David, thanks everyone's on Mahane on Facebook, and my mom's online. Hi mom, and my wife's on Facebook. Thank you for all you guys joining, and let's just keep playing by year. But you know what? This is very important. You have to be really educating yourself so that you know what the market is going to be. And for smart investors, I do it on my 30 days 95 help to all you guys on YouTube. So register on my 95 on my YouTube channel, because I share nuggets on how to get off your 95. I want to help you guys. That's how I did it myself, but I want to help you guys on how do you get out of the current situations, and join the momentum, because you know what, there's going to be a lot of opportunities out there, and a lot of opportunities that if you pay attention now, you're going to be largely rewarded. Talk about maybe 2 or 3 years, you're going to build a lot of equity. So hope you guys well. Thank you for all you guys joining on Zoom, on YouTube, on Facebook. And I want to see you guys next week, and let's keep moving, guys. Let's keep moving, and let's pay attention to the market, what is going on. And send me email if you want further informations. But I want to thank you all. I love you guys, and hopefully all you guys well, healthy, and stay moving in terms of physically investment. Okay, ciao guys. Goodbye, girls.